All right, let's dive right in. Today we're taking a deep dive into Grab Holdings Limited's 2023 annual report.
Yeah, Grab, really interesting company.
It is, annual reports, they might not sound like the most thrilling thing in the world, but
Oh, I don't know, some of them.
this one's juicy, I
Yeah,
promise.
this one
We're talking about a company that's basically trying to become the everything app of Southeast Asia.
it's kind of fascinating. Like, they're not just about those rides anymore. They deliver food, groceries, packages. They're offering financial services. Like, they do it all.
Yeah, and they operate in 8 different countries
Hmm.
across Southeast Asia, which is a whole other
Oh,
layer.
for sure. I mean, each country has its own challenges, its own opportunities.
Exactly, and that's what we're going to unpack in this deep dive. We're going to see how they're tackling each of these business segments,
Absolutely.
how their financials are shaping up, and what their plans are for the future.
Yeah, and we'll be sure to point out some key insights along the way that might surprise you.
Definitely. For example, did you know that they even bought a majority stake in a Malaysian supermarket chain?
Oh, Jaya Grocer.
Diet Grocer. Talk about controlling the whole supply chain.
It's pretty wild.
All right, so let's start with the basics. Grab's mission statement is to drive Southeast Asia forward by creating economic empowerment.
Right. So they're basically trying to build an ecosystem that connects everyone and everything.
Yeah, consumers, merchants, drivers, even financial institutions.
It's ambitious considering how diverse the needs and preferences are across the region.
Okay, so let's jump into their delivery segment, which is obviously a huge part of their business.
For sure.
The report highlights Grab Food, Grab Mart, and Grab Express as their key offerings.
Everyone knows GrabFood, the food delivery giant.
Yeah, but Grab Mart, that's one to watch.
Oh, absolutely. They're expanding rapidly beyond just grocery deliveries. They're operating their own supermarkets now
Really?
under the Jaya Grocer brand in Malaysia.
That's pretty smart.
Yeah, this vertical integration, it's a game changer. It gives them more control over the whole process.
From sourcing to delivery, that's huge.
It is, but of course it's also risky.
Oh, for sure. They're betting on being able to manage a complex supply chain and actually make a profit.
Right. It'll be interesting to see how that plays out long term.
Okay, so let's shift gears to their mobility segment.
Their roots.
Exactly. But ride-hailing is still a core part of their business.
Oh, absolutely.
But they're not putting all their eggs in one basket. The report highlights their expansion into other options: taxis, motorcycles, even carpooling in some markets.
It's a smart move, especially with how competitive the ride-hailing market is.
Absolutely. And they're not just focusing on passengers either. They have Grab rentals.
Right, which helps their driver partners access a vehicle.
Exactly.
But that comes with its own challenges too, of course, like managing a fleet of vehicles, making sure drivers are following all the regulations.
Now let's talk about the segment that I find the most interesting: financial services.
Yeah, they've come a long way from just digital payments.
Exactly. They're offering lending, insurance distribution, wealth management solutions.
Through partnerships and their own ventures.
Yeah, and get this, they even launched their own digital banks.
GXS Bank in Singapore and GX Bank in Malaysia. That's a pretty big deal.
Talk about shaking things up. The report mentions GXS Bank launched savings accounts and a digital lending product called Flex Loan in Singapore.
Right, and GX Bank rolled out savings accounts in Malaysia.
I mean, it's ambitious, but definitely a risky move.
Oh, absolutely. It's a highly regulated market with some big established players.
But if they can navigate those challenges, the potential rewards are enormous.
For sure.
Okay, so let's zoom out a bit and look at their overall financial performance in 2023. The report highlights some pretty impressive figures, like the revenue jumping to $2,359 million.
A big jump from $1,433 million in 2022.
Significant increase, but they did report a net loss of $466 million for the year.
Right, so big growth, but not profitable yet.
So what are the key factors driving this performance?
Well, the report points to a few things. Their deliveries revenue grew really well, driven by reduced incentives and a shift in their business model for certain offerings.
Interesting. And what about mobility?
Mobility revenue also saw a healthy rise.
Okay, but what about financial services?
Financial services dipped a bit. They're attributing that to a strategic shift towards prioritizing profitable transactions over just sheer volume.
That makes sense, finding that balance between growth and profitability.
Exactly, especially in such a competitive market.
Okay, so to really understand their financial picture, we should probably look at some key metrics from their financial statements.
Absolutely. For example, their income statement shows that their gross profit margin actually improved in 2023.
So they're getting better at managing their costs?
Exactly, but their operating expenses remain high.
Makes sense. I mean, they're investing a lot in technology, marketing, expansion.
Right, now what about their balance sheet? What jumps out at you there?
Well, they have a healthy cash position and access to credit facilities.
Yeah, so financially they seem pretty stable.
Yeah. And they also have a lot of property, plant, and equipment reflecting their investments in infrastructure.
What about their cash flow statement? Anything interesting there?
Yeah, their operating activities actually started generating positive cash flow in 2023.
That's a good sign. Shows they can generate cash from their core operations.
Right. But they did have significant cash outflows from investing activities.
Yeah, mostly related to acquisitions and investments in property, plant, and equipment.
And they also used a lot of cash for financing activities, mainly to repay debt.
Now, what about free cash flow? A lot of investors look at that closely.
Yeah, their free cash flow turned positive in 2023, primarily because of that improvement in operating cash flow.
So that's a good sign. They're able to generate cash that they can then use for future investments, debt reduction, maybe even return value to shareholders.
Speaking of returning value to shareholders, the report does highlight their plans to create shareholder value.
Absolutely.
This includes things like their share buyback program,
Yeah, their board authorized a $500 million share repurchase program.
which shows they're pretty confident about their future.
Exactly. And then in March 2024, they actually repurchased 30 million Class A ordinary shares for a total of $96.6 million.
Pretty clear signal they think their stock is undervalued.
Shows their commitment to those shareholders, too.
All right, so it's not all sunshine and rainbows, right? They do acknowledge some serious challenges in this report.
Oh, yeah, for sure.
They talk about the intense competition they face in every single segment.
From established players and new entrants.
And then there's the evolving regulatory landscape across Southeast Asia.
Absolutely. Lots of compliance challenges and potential disruptions.
And of course, we can't forget about the macroeconomic uncertainties.
Inflation, currency fluctuations, it all has an impact.
So it's a pretty complex environment they're operating in.
No doubt, but they're also taking steps to try and mitigate these risks.
Like what?
Well, they're diversifying their offerings, investing in technology and innovation, building strong partnerships, and fostering a strong corporate culture.
So it sounds like they're playing the long game.
Yeah, focused on building a sustainable business.
Okay, so we've covered a lot of ground already.
We have.
Their business segments, their financial performance, their plans, the challenges.
It's a lot.
So what's your overall take on Grab's business moving forward?
Well, I think they're in a strong position, but they definitely have a lot of work to do.
In what sense?
Well, they've shown impressive growth, but they need to improve their profitability.
Right, they've got to make sure those investments pay off.
Exactly, and they've built a strong brand, loyal customers.
But they need to stay ahead of the competition.
Yeah, the market is always changing.
So a lot of potential, but also a lot of risks.
That's business, I guess.
It will be fascinating to see how they navigate this next chapter.
Absolutely, and I think it's important to remember they're not just a company.
What do you mean?
I mean, they're playing a huge role in shaping the digital economy of Southeast Asia.
That's a good point.
And they're impacting the lives of millions of people across the region.
They're not just building a business, they're building an ecosystem.
Exactly, and that's what makes their story so interesting.
All right, so before we move on, let's take a closer look at some of the key takeaways from their annual report,
Okay, that's good.
focusing on their business segments and those growth strategies.
Let's do it.
We'll break down each segment, highlight their key offerings, recent initiatives, and the challenges they face in a bit more detail.
All right, let's dive in. Okay, so let's start with their delivery segment. We said it was a major growth driver for Grab, and the report highlights some interesting trends and strategies.
Yeah, and I'm curious about this whole supermarket play with Jaya Grocer in Malaysia.
Oh, yeah, that's a perfect example of their vertical integration strategy. You know, they're not just delivering groceries anymore. They own the whole process, from sourcing to stocking to delivery.
Gives them a lot of control.
A lot of control over quality, efficiency, and hopefully profitability.
Hopefully. But isn't that a pretty massive undertaking? I mean, managing a whole supermarket chain is totally different from just running a delivery platform.
Totally different. It comes with its own set of challenges. Like, the report even acknowledges the complexities of managing inventory and logistics and pricing at a much larger scale.
Right.
But they're betting that the benefits outweigh those risks.
Okay, so how do they plan to make sure this strategy actually succeeds?
Well, they're really focusing on using technology and data to optimize their operations.
Okay, in what way?
Like, they're using data analytics to predict demand manage inventory levels, and even personalize recommendations for shoppers.
So they're using their tech expertise to get an edge in the traditional retail market.
Exactly. And it's not just about technology. They're also focused on building strong partnerships with local suppliers and farmers.
Okay, to ensure that reliable supply chain.
Exactly. And they're even experimenting with new store formats and delivery models.
To cater to different customer needs.
Exactly. So it's a whole new approach.
It sounds like they're really trying to disrupt the grocery market.
Yeah, and it's not just in Malaysia. They're looking at similar opportunities in other markets as well.
So beyond groceries, what other initiatives are they pursuing in this deliveries segment?
Well, they're constantly expanding Grab Food.
Mhm.
They're partnering with more restaurants, introducing new cuisines, experimenting with features like pre-ordering and scheduled delivery.
They want to be the go-to for anything food-related.
Exactly. And they're also using that delivery network to expand into other areas like pharmaceuticals,
Really?
even pet supplies.
Wow.
Yeah, so they're not afraid to try new things.
So what would you say are the biggest challenges they face in this delivery segment?
Well, competition, of course, it's a huge factor.
It's a crowded market.
Yeah, they're up against other food delivery platforms, grocery delivery services, and even traditional retailers that are moving online.
And then there are the logistical challenges, right, of operating in a region with such diverse infrastructure.
Absolutely. And different levels of connectivity, plus regulations around food safety and delivery services, those can vary a lot from country to country.
Yeah, it makes things complicated.
Then on top of all that, there's the rising costs of labor and fuel.
Putting pressure on those margins.
Exactly. So it's a tough business.
But it seems like they're handling it pretty well so far.
Yeah, they're definitely a force to be reckoned with in the delivery space. Okay, so let's move on to their mobility segment.
Okay. Their roots,
Yeah.
ride-hailing. How are they adapting to this changing landscape?
Well, as we mentioned earlier, they're diversifying their offerings beyond just cars. So they're integrating taxis, motorcycles, and even those carpooling options into the platform.
Yeah, that makes sense. It caters to a wider range of needs.
And they're also experimenting with new technologies like electric vehicles and autonomous driving.
So they're trying to lead the way.
Yeah, they're not just playing catch up. They're looking to shape the future of mobility, and they're also investing in initiatives to improve driver welfare and safety.
Okay, like training programs?
Training programs, insurance benefits, and even financial assistance programs.
So they're trying to build a more sustainable and equitable ecosystem for their driver partners.
Exactly. They know their drivers are key to their success.
So what are some of the challenges they're facing in this mobility segment?
Well, again, competition is fierce.
Of course.
They're up against other ride-hailing giants and new startups and even traditional taxi companies that are starting to use technology.
And the regulations around ride-hailing can be really complex.
Very complex, and they vary a lot from country to country, so they have to navigate all these different licensing requirements, safety standards, and even pricing regulations.
It's a lot to keep track of.
It is.
Yeah.
And then there's the issue of driver safety and security, especially in a region with so much traffic congestion.
Yeah, and varying levels of law enforcement.
Exactly. It's a serious concern. So they're investing in technology and initiatives to try and address these issues, but it's an ongoing challenge.
So it's a balancing act.
Yeah, balancing innovation, driver welfare, and regulatory compliance.
Okay, so let's move on to what I think is the most intriguing part of their business, their financial services segment.
This is where things get really interesting. They're trying to revolutionize the financial landscape in Southeast Asia.
Yeah, by tapping into that huge underbanked population.
And launching their own digital banks, that was a bold move.
It really was. So what are their key offerings in this segment?
Well, they offer a wide range of services, everything from digital payments and mobile wallets to microloans, insurance products, and even wealth management solutions.
Like a one-stop shop for all things financial.
Exactly. They're using their existing user base and that technology platform to offer accessible and affordable financial services to people who traditional banks haven't really served.
And they're doing this through a mix of partnerships and their own ventures, right?
Right, they're working with banks, insurance companies, even investment firms to offer a diverse range of products.
But the financial services industry is heavily regulated. How are they dealing with that?
It's a huge challenge. They have to get all the right licenses, comply with all the regulations, and make sure all that sensitive financial data is secure and private.
And they're competing with banks and financial institutions that have been around for decades.
Right, but they're bringing something new to the table, innovative solutions, fresh perspective.
And using technology and data to give people personalized service.
Right, and they're reaching a market that traditional banks have often overlooked.
Yeah, like the underbanked population, small businesses, gig workers.
Yeah.
people who are often excluded from traditional financial systems.
Exactly. So it's about creating a more inclusive financial ecosystem.
But they face challenges beyond regulations and competition.
Right. Oh, yeah, for sure.
Like what?
Well, building trust is huge in financial services. They need people to believe that their platform is secure and reliable and trustworthy.
Especially when it comes to their money.
Exactly. And then there's financial literacy. A lot of people in the region aren't familiar with digital financial services.
So they need to educate their users.
Yeah, it's not just about the technology. It's about building trust and fostering financial inclusion.
And that takes time and a deep understanding of the local context.
Absolutely.
So it seems like this financial services segment, it's exciting, but it's also really challenging.
It's both. They have a real chance to disrupt the financial landscape, but there are some big hurdles along the way. It'll be interesting to see what happens in the next few years.
Now, they also have this enterprise and new initiatives segment, right?
Right. That includes their advertising platform Grab Ads and things like hotel bookings and subscriptions that they offer through their app.
So they're looking for ways to make money beyond their core services.
Exactly. Grab Ads is really interesting because it uses that huge network of drivers and vehicles to create advertising opportunities.
Like turning their fleet into mobile billboards.
Yeah, and they can target very specific locations and demographics.
That's smart.
It opens up new revenue streams that could really help their growth and profitability.
So they're constantly exploring new avenues.
They are, and they're not just focused on growth, they're also committed to making a positive social impact.
Right. We haven't really talked about their 4H's principles: heart, hunger, honor, and humility. But the report really emphasizes how those values are a part of their business practices.
They're more than just words. They're reflected in how they support their driver and merchant partners and their efforts to be environmentally sustainable.
Yeah, and their commitment to communities across Southeast Asia.
It's good to see a company that cares about more than just the bottom line.
Okay, so before we wrap up our deep dive into this annual report, let's zoom out and look at the bigger picture. I mean, we talked about their business segments, financials, growth strategies, but what does it all mean?
What are the key takeaways?
What are the key takeaways? What should we be paying attention to?
Well, I think one of the key takeaways is that Grab is so much more than just a ride-hailing company.
Right.
They're becoming this multifaceted tech platform that's shaping the digital economy of Southeast Asia.
Yeah, that you're trying to become the everything app for the region.
Exactly. And they're doing it by focusing on three things: hyper-localization, technology and innovation, and social impact.
Okay, break this down for me.
Sure. So hyper-localization basically means that they're tailoring their services to each specific market.
Making sure things are relevant.
Right. They're adapting to the local culture, the infrastructure, and the regulations.
Makes sense, especially in a region as diverse as Southeast Asia.
Exactly. Then there's technology and innovation. They're putting a lot of money into research and development, especially things like AI, data analytics, even blockchain technology.
So they're always looking for ways to improve.
And they're experimenting with new business models, too, like subscription services and loyalty programs.
To keep people engaged.
Exactly. So they're trying to stay ahead of the curve.
Then what about their financial performance?
Right. Well, we know they're still reporting losses, but their gross merchandise volume, or GMV, grew by 5% in 2023, reaching $21 billion.
Okay.
That's the total value of all the transactions that happened on their platform.
It's a good indicator.
But their financial services GMV, that actually declined.
Because they're focusing on profitable transactions.
Right, quality over quantity. So they're willing to sacrifice a bit of growth in the short term to build a more sustainable business.
Are there any signs that they're getting closer to profitability?
Well, their gross profit margin did improve in 2023.
Okay.
And their operating cash flow turned positive.
So those are good signs.
Yeah, it shows they're moving in the right direction, but there's still work to do. They need to improve their cost structure, their pricing strategies, and find new ways to make money from their platform.
Right. And they have to keep innovating to keep up with the market.
Exactly. Now their balance sheet shows they have a healthy cash position and access to credit facilities.
Okay, that's good, especially since they're still investing so much in their business.
Right, and all that property, plant, and equipment that shows how much they're investing in their infrastructure.
Okay, and their cash flow their operating cash flow turned positive in 2023.
Right, and their free cash flow also turned positive.
Which means they have cash to invest.
Yeah, or pay down debt or return value to shareholders.
And that share buyback program,
Yeah.
That's a pretty strong signal that they're confident about their future.
Yeah, it shows they believe in their long-term prospects and they want to reward their investors.
Okay, so we talked about competition and regulations and macroeconomic uncertainties, but are there any other risks or challenges that could slow them down?
Well, one challenge is going to be attracting and retaining top talent.
Yeah, the tech industry is so competitive
They need to offer good salaries, benefits, and career opportunities to get the best people.
and build a strong culture that encourages innovation.
Exactly. And then there are challenges related to data privacy and security.
Of course, they collect a lot of data.
They have to keep it safe from breaches and misuse.
That's a big deal.
It is, especially with all the concerns about data privacy these days. And then there's the challenge of scaling their operations while maintaining quality.
Yeah, as they grow, they need to make sure they can handle the increased complexity.
And not compromise the user experience. And they have to do all this while navigating different cultures, regulations, and infrastructure challenges across Southeast Asia.
It's a lot of moving parts.
A lot of moving parts, but they've shown they can be resilient and adaptable.
They've overcome obstacles in the past.
They have, and they have a clear vision and strong leadership.
So you're optimistic.
I am. I think they're well positioned to handle these challenges and continue to grow.
It'll be interesting to watch how they evolve in the coming years.
Absolutely. Now, before we move on to their plans for the future,
Yeah.
let's highlight some key metrics from their financial statements that we haven't really touched on yet.
Okay, like what?
Well, we talked about revenue and net loss and gross merchandise volume and gross profit margin, but there are other metrics that give us a better understanding of their financial health.
Okay, so for example.
Well, their income statement shows their operating expenses.
Okay.
That includes things like sales and marketing, research and development, and general administrative expenses.
And what about their balance sheet?
Their balance sheet shows their liabilities, things like debt, accounts payable, other obligations.
Debt level is an important one to watch.
It is. And what about their cash flow statement? We talked about operating cash flow and free cash flow.
Mm-hmm.
But their cash flow statement also shows their investing cash flow, which is basically how much money they're putting into things like property, plant, and equipment.
Acquisitions and other investments.
Right. So it shows how much they're investing in their future growth.
So it's like putting together a puzzle. Each metric gives us another piece of the picture.
Exactly. And by looking at all these metrics, investors and analysts can get a really good understanding of Grab's financial health.
Okay, so let's move on to their plans for the future and wrap up our deep dive into Grab Holdings Limited. All right, so we've explored their past, their present. What about their future? What are Grab's plans? What's on the horizon for them?
Well, the report definitely hints that they're really going all in on that super app strategy.
Yeah.
They want to be the go-to for everything in Southeast Asia: transportation, food, finance, even healthcare.
It's a big goal. How do they plan to actually pull that off?
Well, their growth strategy seems to focus on a few key things: expanding their existing services, entering new markets, and constantly innovating.
Makes sense? Give me some examples.
Okay, so like in their delivery segment, they're not just sticking with food and groceries. They're looking at things like pharmaceuticals, even pet supplies.
Interesting. So diversifying within those core segments.
Yeah, and then in terms of new markets, the report doesn't explicitly mention expanding outside of Southeast Asia,
Okay.
but they're definitely focused on growing within the region. There's still a lot of untapped potential there, especially when it comes to financial services.
Right. Reaching that underbanked population.
Exactly. And then there's innovation.
Yeah.
They're investing heavily in research and development, particularly in things like AI, data analytics, and even blockchain technology.
Keeping up with the times.
Absolutely. And they're experimenting with new business models too, like subscription services and loyalty programs.
To keep customers engaged.
Exactly. They know they can't afford to stand still. They have to keep innovating to stay ahead of the game.
Which brings us to competition. How are they planning to maintain their edge with so many rivals out there?
Well, they've got a multifaceted approach first. They're leveraging their understanding of the Southeast Asian market. They've got local teams on the ground who really understand the nuances of each country.
It's valuable, that local expertise.
It is. And then they're building a strong brand reputation based on trust, reliability, and convenience.
Those 4 H's.
Right. Heart, hunger, honor, and humility. They're not just words. They're part of their company culture.
And then there's that ecosystem they're building.
Yeah, their super app isn't just a bunch of random services. It's a platform that connects everything: transportation, food, finance, you name it.
So as they add more users and services, the value of the platform increases.
That's the idea that network effect gives them a big advantage over competitors who are only focusing on one or two things.
Okay, so lots of strengths and ambitious plans, but there have to be some roadblocks out there, right? What could potentially slow them down?
Well, one challenge is going to be managing their growth sustainably. Well, sometimes expanding too quickly can lead to problems, inefficiencies, quality control issues, even cultural clashes.
Right, it's not just about growing fast, it's about growing the right way.
Exactly. They need to find that balance between aggressive growth and maintaining their standards.
And then there's the regulatory landscape in Southeast Asia. It's always changing.
It is, especially around things like ride hailing, food delivery, and financial services. They've got to stay on top of those changes to make sure they're in compliance.
And data privacy.
Huge issue. The more data they collect, the more important it becomes to protect that data from breaches and misuse.
It's all about maintaining trust.
Yeah, showing their users and stakeholders that they take data security seriously.
So lots of opportunities, but also lots of challenges.
That's the tech world for you, but based on what we've seen, I think they're up to the task.
It's been a really fascinating look into Grab Holdings Limited. They're doing some really innovative things in Southeast Asia, and it's exciting to think about what they might accomplish in the future.
I agree. They're definitely a company to keep an eye on.
Well, that wraps up our deep dive into Grab Holdings Limited's 2023 annual report.
It's been a journey.
We covered their business segments, their financials, their growth strategies, and the challenges they face.
We talked about their plans for the future, their commitment to social impact, and their efforts to navigate such a complex landscape.
It's a story of innovation and disruption and ambition, a story that's still being written.
Absolutely.
So to our listeners, keep following Grab's journey. See what they do next.
Pay attention to their announcements, their initiatives, and the impact they have on the region.
And most importantly, form your own opinions. Do you think they'll achieve those ambitious goals? Will they overcome the challenges?
The answers to those questions, they're going to shape the future of the digital economy in Southeast Asia and maybe even beyond.
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep asking questions.